Yo, what is going on, y'all? Welcome back to another brand new video. In today's video, I will be going over a part 2, basically piggybacking on my previous video, which was about trading from a probability based mindset. Today we are just exploring another one of my very favorite websites. I find this website actually a little bit better than the previous site because it gives us a lot more information and essentially breaks down your data based on like losing streaks, winning streaks, and how you perform month to month as well, taking the averages of those, and then you can determine how well your system truly is performing. And what these simulators really, the goal of these simulators is, first, number one, to help you build a probability based mindset where you're focused on trading off of statistics from your data collection, whether that was back testing, forward testing, live trading. For me, I've done all three of those. My personal favorite is back testing. And then once I back test, I just do live trading. I don't really do forward tests that often. Majority of times, I just go straight to live trading now because I already have built up confidence from the live trading results, as well as, of course, my previous back testing results. That what I teach, the strategies I teach you guys, the system does indeed work over a long period of time. You can feel free to back test all the way back to the 2000s if you wanted to. I don't think we don't really have any much data. I believe you can really go back on the 1 minute chart at least to 2000s, but I think you probably get back to maybe 2016, 2018 with FX replay on the 1 minute chart. So yeah, you guys can check out FX replay if you guys are interested in something to basically help you backtest, a backtesting tool that can go further than TradingView charts. Nonetheless, let's get straight into the video. The site is called forexsignals.com, Monte Carlo Simulator. Hopefully I'm saying that right. And essentially, this is where you just plug in your data, okay? So let's just make this very realistic today, okay? Let's start with initial balance of 1,000. I think that's realistic. Now, one thing to mention is this website does not do consistent risk in terms of amount per trade. It is 100% compounding. Therefore, you're risking 1% of your new account balance after every single trade. So this is including compounding and not like risking, for example, 1,000 per trade every trade. You're actually risking different monetary values per trade because it's a different risk. It's the same. It's based on risk percent rather than risk amount or dollar value. So let's using this site. Let's say initial balance starts at 1,000. Let's say your risk percent per trade is, I'd say risk percent per trade. Let's just do 1%. 1% is very ideal because what that tells me is you need to lose 100 trades in a row to lose your account. Now, when you're doing 1% per trade rather than monetary value per trade, it would take even more trades to lose your account. So, nonetheless, let's just stick with the 100 rule, okay? 100 trades in a row lost, you will lose your account. That's literally, you should be nowhere close to losing 100 trades in a row, okay? If you are, that means your system is wrong or your psychology is wrong. One of those two things is messed up, okay? Majority of people, I will say, is their system and their strategy. They're not learning from the right places, or their system does not have data to back up what it really is performing. It's like if you had a trading robot and it had a very poor results from backtesting and you're still trading it live. No matter how good your psychology is, even if you execute like a robot, you will be unprofitable forever. Okay, until you change that system, change your bot, just like you change your system, collect data, and then once you have a profitable edge that I teach, which I teach you guys, then you can focus on your psychology at last to make sure psychology is in check when you're executing your trades live. But again, we'll start with 1% risk per trade. Winning trades percent, let's be realistic here. Let's say you have a 50% win rate, okay, to make this easy. And then let's say you have a 1 to 2 risk reward average. Personally, for me, my typical risk reward average is around 1 to 4, 1 to 5. That's my average. Some of my trades hit 1 to 3 only. Some of my trades hit 1 to 7, 1 to 8, 1 to 9. But majority of my trades on average is 1 to 4, 1 to 5 range, around a 50% win rate. Okay, this all depends on which entry model, of course, that I teach, that you're using, that I teach you guys in the course. So depending on which entry model you're using, you will have a higher or lower win rate, as well as a higher or lower risk reward with that trading entry model, as well as the next thing is literally your draw on liquidity that I teach you guys as well. how to identify real market structure, not fake market structure, real market structure that we are using. And with that anticipation, you will boost that win rate even higher to, depending on how much experience you have, how much data you've collected, and how much trade filtering you're also doing as well based on your data. You could have this up to 70% win rate at a very high, good risk reward, right? You just potentially take less trades because you're filtering more trades, filtering more of the bad trades out. But nonetheless, I like to trade every day, so I don't like to add too many filters or restrictions on my trades. Okay, this is all personal opinion, personal life experience based on how much time you personally have. If you don't have much time, yes, you want to focus more on the filtering out trades that are bad, focusing on less screen time essentially for you if you're busy, but more returns because you're taking less lower quality setups. So here, let's say you win 50% time, you're 1-2 risk reward. This is very respectable. You definitely could do way better than this, but let's just say 1 or 2. I think that's reasonable for now. Let's say you are 2 years deep into trading, okay, from the right person, and 1-2 risk reward 50% is profitable that we know. 1-1 would be break even. 1-2 is profitable. Average number of trades per month. This varies whether you're day trading, scalping, or swing trading. I mainly teach day trading, meaning intraday trading, not necessarily scalping. Some of my trades you can consider scalps, right? It all depends. Day trading and scalping sometimes are intertwined between each other. There's not a clear mechanical definition for each one, but for example, because some of my trades intraday could last only 5 minutes and it hits TP, while the other end of my trades in terms of duration would last maybe an hour max, right? But my average is around 30 minutes for my winning trades. And in losing trades, it takes about 5 minutes to stop loss. So I know pretty quick. Average number of trades per month. This all depends, like I said, whether you're doing that. I teach mainly day trading, but all the strategies, the concepts I teach in the course, of course, you guys can apply to swing trading. The market is fractal. It's just that you'll get a lot less frequency of setups, okay? And it doesn't necessarily mean your win rate will be higher because you're trading a higher time frame. You have to test that out and see which combination of time frames will work best. So average number of trades per month. For me personally, I take around roughly, I'd say 5 trades a day, 20 active trading days roughly a month. So for me, that is 100 trades a month. Okay. There's people that take 20 trades a day. All depends on your trading system. Over trading to me is not a set number of trades. It's taking trades outside of your predefined data collection and analysis that you have backing up your trading system. So if you are scalping on the seconds, then 20 trades in a day is not over trading. But if you're a swing trader and you're taking 5 trades a day, that doesn't make any sense to me, and that is definitely considered over trading. So because you're definitely forcing stuff. There's no way you're swing trading with 5 trades every single day, right? Doesn't make any sense. So all depends on your system. That's why you cannot compare yourself to another person that's trading a different system or strategy. Everyone has a different psychology that they build up that suits their strategy and system they are trading. So you cannot compare yourself with another person's system or psychology or strategy. Now we get that out of hand. Total months. Let's say we trade this for 1 year, because why not? Remember, this is compounding 1% per trade. Let's simulate returns. Okay, so this is over a span of 1 year. I don't know why it says 2026. I believe starting from 2025, I assume. But nonetheless, yeah, starts from 2025. Okay, that's fair. 1 year, 12 months, 100 trades per day, 100 trades per month. These are the typical results you can expect, averaged out, sampled out. So this is most possible, which is typically what I have it on. This is your worst results that you could potentially have and your best results, and most possible is the most realistic after all the data filtering. But you guys can see, what I'm trying to show you guys here today is trusting your process, trusting your edge once you have that and that data to back it up. The rest is all about time, which is also correlated to time frequency or trade frequency, the number of trades you take that are in your setup. And literally with consistency, you will grow your accounts extremely fast. I'm not saying fast as in you get rich overnight, but over a span of a year. A year does sound like a long time, but trust me, that time goes by so fast. And I know many of you guys are doing probably the stupidest things possible, right? So you clearly have time to do this, right? What I mean trying to say is, like, some people might be playing video games all day without putting the effort ahead of time into their trading, while you could put that time into trading and then that'll pay off way more than video games will. Now, what I'm trying to say is, you put in the work first for trading, you put in the effort in years of experience screen time first in trading, later on you reap the rewards. So for example, for me, let's say I have technically the freedom to play video games for 8 hours a day. Why? Because I've already done 2 to 3 years of experience, trial and error, data collection from trading. Okay? So I have tons of trading knowledge and experience, and I already done all the dirty work ahead of time through that time where I was playing no video games, nothing like that. I was just straight pure grinding, putting my head down, okay? Grinding in science. And that gives me now the ability to afford a lot of free time to do whatever I want once I'm done trading. I'm still trading, okay? Active hours, I'm still roughly trading 3 hours a day. That's my kills in session time. If I'm trading New York session or Asia session, depends. But here are basically the results you can expect. You guys can see from month to month. The first thing I want to note down to you guys is, you will not get the exact returns every single month, percent wise, because market conditions, especially because the market is driven by fundamentals, right? Technicals is essentially a way to portray what the fundamentals is saying. Okay, the technicals is just the algorithm basically portraying what fundamentals is showing. Okay, so if gold is doing very well from technical standpoint, the algo will be delivering bullish. That's how it works. So you guys can see, based on market conditions and what you're trading and seasonality, for example, gold moves different during the summer. Okay, that's just something I noticed from my experience. That's just a quick little example. Okay, and then you guys know, typically December is holiday month for banks and such. And so typically during December is a very slow month. Now, this calculator obviously is not taking into consideration that December is a slow month, okay? It is just basically taking averages and moving around the percentages. But that's what I want to get to you guys, that you should not have an exact expectation necessarily of hitting a certain percent every single month. But what I will say is, you should have maybe like at least a minimum threshold goal. And what I mean by that is, essentially you want to have like a threshold goal where it's, let's say, every single month I want to maintain at least 30 to 40% RR or percent gain per month on my personal account, for example. I want to maintain that percent throughout the whole year, rather than saying I want to target or aim for 200% next month. You have a more consistent goal of maintaining 30, 40, 50% per month. That is much better, in my opinion, in terms of goal making, than having these even higher targets, and that could really mess you up psychologically and emotionally as well on the charts. And that leads to over risking per trade. Then you're messing up your own system, and then you could literally wipe out a previous month's gains just from one single bad trading week or one single trading month. However, I will say, because of trade frequency, 5 trades a day for me, 100 trades a month, I don't have red months, okay? I will have red days, yes. But 80% of my days are end green, and my green days I maintain are more in profit, as in the amount I'm making on my green days. For example, one average green day is way more than my average red day. So my red days are basically almost non-existent. I would say red days are normal for us, very normal. Just don't have it occur frequently. That is all. I'm not saying you should never have a red day, but try to limit those, right? And then red weeks, I would say, is fairly rare. You could potentially have red weeks then and there, depending on how many trades you're taking. Maybe like, let's say a week, you're only taking 2 trades that week because you're on vacation or something. Then a red week, that's a red week, right? But it's not really a valid size of sample data. It's only 2 trades, so it makes sense you have a red week. So I wouldn't look necessarily at look at it like that. I would like to just mainly focus for you guys to just focus on ending green at the end of the month. Okay, focus on month to month performance rather than day to day or week to week, because month to month is giving you enough wiggle room for your data and your edge to play out. You guys can see January here 4%, next month February 44%, March 100%, April, May around 50-60%, July slow month, August pretty high month, in December whopping 100% return, and then January 36%. So don't forget, this is with just a 1 to 2 risk reward with a 50% win rate. This is very achievable, very, very achievable. What I teach you guys, my system in my course, you will outperform this, okay? You will outperform this if you have taken notes on everything, if you have learned the strategies, you have done your back testing, done your forward testing with live trading, maybe trading on demo for a bit, get yourself familiar with dealing with your emotions, keeping those in check, and with experience and data collection and journaling every single trade, you will get to the point where you will optimize the strategy and system I teach you to where I want you guys to be at, which is preferably, this all depends on, of course, which entry model, like I said earlier, that you guys are using, because some of my entry models are 70% win rates with lower risk reward. So, but overall on average, I want you guys to get to the point where with enough time and experience, it takes a ton of screen time to get familiar and really recognize these things play out live. I want to get you guys to around, you should ideally get to around 50% win rate. If you do include break evens, that would change your win rate percent, obviously. I don't know, I'm not too quite sure how this site calculates break evens. That's why I just focus on my winning trade percent, because for me, for break evens, I just count them as neutral trades. They don't add to my winning percent or losing trade percent, so it technically is just 0%, but it's not. If you're including your break even management, depending on how you manage your trades as well, that is important as well as your TP and targets. But I want you guys, ideally, you should get to a point maybe within like 1 to 2 years, depending on how much experience you already have, at a 50% win rate. You can potentially I would say 70% win rate for a high risk reward system, and then the risk reward ratio around 4 to 5. Okay, around 4 to 5. Now I'm not going to import this right now because this is a lot harder. This takes a lot more experience going over the seasonalities in different market conditions as well to get to. But 50% 1 to 2 is very, very achievable, easily achievable, I'd say, with the system that I teach you guys. So you just have to execute and make sure you're not making any psychological mistakes, really. So you guys can see from this trading system, a 50% risking 1 to 2, having a 1 to 2 RR, you start with $1,000 and you end the year with $255,000. That's crazy, right? But this is showing how compound interest really works. Now, if this was not compounding 1%, this would be a whole different story. This would be nowhere close to this number right here. Why? Because the trade frequency, because we're taking 100 trades a month. Okay, that's taking seriously, not taking really any days off. Trading every single day, 5 trades a day on average. Okay, and you guys can see crazy return percent. And what's I love about this site is it shows your max consecutive wins, consecutive losses. This is all 100% based on your win rate. Nothing to do with the risk reward. Okay, this is just based on win rate. And since we have about a 50% win rate, roughly these are equal. Right here, they calculate as a 48.9%. And the maximum drawdown is how much drawdown you can expect in terms of percent, or you can convert this to risk reward as well. So if you're risking 1% per trade, that means your 1R is 1%. So this is negative 16R down is your maximum trading drawdown. So you can expect these stats to occur, meaning when you're trading with your system now, with this trade frequency, you're going to expect to have a max consecutive loss of 13 losses in a row. That is like possible in your trading system because of how many trades you're taking. Same with maximum consecutive wins, as well as maximum drawdown. You could potentially have a negative 16% drawdown, which is not ideal, in my opinion. So if you wanted to, you could risk even lower percent, right? Let's put this back to 50%. Look what happens when you risk less percent. Okay, I think this site, I think it can't do 2.5. Let's just do 0.2. You can see your return balance is a lot lower, right? Because you're only risking 0.2% per trade. And on $1,000 account, that's basically nothing. So obviously you would be risking more on $1,000 account. If you put this at initial 10K, then that would change the story a little bit. But you guys can see that the maximum drawdown is way less now in terms of percentage. But your gains are way less percent now. So you just want to understand that this game is a game of probabilities, in that it is balancing out your risk to reward. Okay, the more risk you put on average, the more reward. High risk, high reward. Low risk, low reward. You will still make money. It's just you will have a lower reward in return. That is all, right? This is roughly averaging 10% a month, which is what a lot of traders in the beginning try to target. I think it's a solid beginner target. But I'd say as you get later into your trading journey, especially for day traders, you can most definitely get way over 10% a month on average. Okay, 50% range is pretty solid. And then ideally you want to get to the 100% range. If you're not taking trades every day though, then it's a lot harder because trade frequency. That is all. And you guys can see this risk percent does not affect your max consecutive losses or wins. Only win rate does. So if your win rate was 80%, you can see your max consecutive losses now turns only into 6, and your consecutive wins is also increased as well. As well as your maximum drawdown is less now too, because of your win rate. So let's say your win rate was 40%, and let's put this back. Hold on, let's put it back. Risk percent 1% per trade. Essentially, what this calculator you can do with this is, after you have your this is very important. Make sure your average number of trades per month is roughly ballpark like number of trades you're actually taking per month. And then essentially with this, you can optimize your trading risk management system. Why? Because now you know, okay, in my trading system, I only want a max 5% drawdown, let's say. Negative 5% is my max drawdown I ideally want. Over a span of a year, over a span of 100 trades a month, 1.2K trades a year. So if you want that max drawdown of only around 5%, then you would focus on risking only 0.5% per trade consistently. Okay, and if that's still too much drawdown for you, you can reduce this until you're comfortable, right? Now let's say you are very comfortable with taking high risk. Okay, you can risk 2% per trade. You guys can clearly see the numbers are way bigger. Your max drawdown is also way bigger. This is not good, right? I've never risked 2% consistently per trade, and this is the exact reason why, because I take a lot of trades a year, and negative 23% drawdown is very bad. Yes, you're still making money over the long run, but this creates a very bad mental state for you, because don't forget there's psychology is also involved in day trading, especially as your account gets bigger. It's even a bigger impact on your psychology, right? Especially since you're compounding your account, not just risking the same amount per trade. This is very bad. I would definitely stay away in terms of this trading system. If with a 50% at 1 to 2 risk reward with average number of trades, 100 trades a month, definitely would not risk 2% per trade. This drawdown is too much, and you don't understand how it feels until you get there, right? Just trust me on that. But you can see return is way bigger, right? Which makes sense, because you're risking double the percent, and that's compounded double every single time, which is even more, makes it even more, right? So you guys can see in the system, you would turn 1,000 to 40 mil, but this is just not realistic. Why? Because as your account is growing per trade, you start to get to a point where you might potentially have liquidity issues. First of all, filling in all those orders, okay, on a real account. I'm not talking about prop firm accounts here. I'm talking about real personal live funded accounts, because prop firm accounts are demo accounts. You can fill in however much you want instantly, but on live it's not the same. It takes time to fill in your orders, especially when your account grows bigger. You can get delayed executions that messes up your risk reward average, and so that's why I highly also recommend people to try to maintain a still solid win rate, because your risk reward as your account gets bigger will just decrease typically because of spread and commissions and such, right? You won't get filled at like the same price that you used to when you're risking very little per trade. You have worse basically price execution. So your risk reward will go down. And no one's gonna be risking at some point when your account grows to like maybe I don't have an exact number right now, but at some point when your account grows very big, like 7 figures I'm talking, you're not gonna be risking 1% per trade anymore. At least that's from a psychological standpoint, because 1% of 1 million is 10K. Okay, 10K a trade. If you're taking, let's say for example, I take 5 trades a day. If you're taking 5 trades a day, I lose all 5. That's 50K down in a single day. Okay, a lot of people, first of all, you cannot handle that. Okay, we are not like hedge funds where we have all these private investors and capital and all this money. This is all your personal funds that you worked so hard for over the years of trading and compounding your account. So at some point, you're not going to continue risking 1% per trade. Actually, what happens is as your account grows very exponentially bigger, you reduce your risk percent per trade, which is a smart way of growing your account, not growing it this way, right? So yes, if you were risking 2% per trade, literally for a year, you would grow, yes, your 1K to 37 mil. Worst would be 2 mil. Best, almost a bill. But yeah, you would be growing this theoretically. But realistically, because of the live market environment, in psychology, I highly doubt you're going to be risking 1% when your account's at 3 million, right? 30K a trade, I highly doubt you're going to do that consistently. You could do it for 1 trade, 2 trades, but doing that every single day takes a huge toll on your mind. Just trust me on that. So that's why you would reduce your risk percent per trade, but never, ever, ever, ever increase your risk percent per trade as your account grows. It makes no sense. Why? Because you're taking on even bigger risk than before when you're already taking on more monetary value because your account is already growing. So if your account is already growing, you're risking more monetary value per trade. You're already risking more. You're like already making more money every trade as your account grows. But because of human greed, you're trying to exponentiate that process. And potentially what that happens is you can go on tilt for a day or a week or a month, and you can actually blow the account because you stop following your trading rules. And when you stop following your trading rules and trading system that your edge tells you, this maximum drawdown does not matter anymore. Same with all these other stats. Your 1% could go down to 20% if you go on tilt. All these numbers do not matter. They go out the window. It does not matter at all anymore because you're not trading on this probability that you predefined from your data. So that is why this is not realistic. Okay, most people are going to be risking a lot less percent as your account grows. So let's say this is a personal thing, right? Of course, also another thing is you don't want to have all your money in your trading account. You also want to have money on the side, right? People have bills, okay? Not only bills, living costs, things like that, but I'm saying another additional pocket of money where it's not related to your bills or your trading account, like savings essentially, okay? For emergencies, you definitely don't want to be having everything in your trading account as well. So that's another thing. But you definitely should, since especially this is your full main full-time income, then yeah, you could say a pretty good majority of chunk of your money will be in your trading account, but never 100%. Because you always need things to pay for bills and emergency funds, right? There's so many other things, as well as you can invest your money into, I wouldn't say safer routes, right? Because you can say real estate over time. From my experience, real estate over time does go up, but it really depends a lot. You still have to time the market for real estate, just like timing the market in day trading, except day trading is a lot more precise, a lot more harder than timing the market for real estate, right? Because you could buy a house at a bad price from 20 years ago, and your price could actually not be profitable over 20 years of real estate. Why? Because of inflation. Inflation is increasing at a faster percent than the value of your house, which is very possible if you buy it at a very bad price. So if real estate is not as easy as people make it seem. You have to be knowledgeable, at least to understand, and then once you have that capital, that's when you can invest into that real estate and make it a safe investment and purchase. Okay. Now, if you're doing Airbnb rentals, stuff like that, that is completely different. I'm just completely talking about like buying a house straight up, or buying multiple properties and holding them long term for potential profit splits or flips in the future. So right here, this is 1 year, right? Let's say you risk 0.5% per trade. Let's make it more realistic to, we'll keep it at 1%. I think because 1% at this is only 10% drawdown, which is not too bad, honestly. Not too bad at all. I would say for me, maximum drawdown for me that's tolerable is probably around this percent. Anything like close to 20% is not ideal at all. That's a lot of drawdown, especially as your account capital grows bigger. That's huge drawdown that can definitely make you go on tilt. So would definitely not want to put yourself in that kind of position in the first place. Okay. And let's make this more realistic by having average number of trades per month changed. Because since I do this full time, 5 trades a day for me, I have a lot of free time, so 5 trades a day for me is very possible. But for a lot of other people, maybe not. So let's go off a number of 2 trades a day. I think 2 trades a day is very realistic. Yeah, it gives you enough room for 2 max losses a day. So 2 trades a day on average. So I'll be average number of trades per month is 40. Okay, this is more realistic. This is with a 50% win rate with a 2R average. You grow 1K to 8K in a year. That's still great returns. You still return 8 times your account value. Don't forget, 90% of traders are actually negative. Okay, and the main reason is, first off, that statistic online is not accurate because majority of those people also did not spend the right amount of money and time into the market to truly understand how to truly trade. So a lot of people were those people that are full porting or just not knowing what they're doing, and they lost and they quit. And that's considered part of the losing statistic. And it doesn't factor in how many years of experience these traders had. So this was the growth of account, okay? And you can see you're averaging about 20-30% return per month, which is pretty solid, right? Pretty solid. Of course, you see there's some negative months, right? Because your trade frequency is low, so the law of big numbers is not applying as much to you. But as the trade frequency increases, your data plays out more, and you typically would not have a red month. Now, let's say average number of trades per month 40. Okay, we said that's realistic. 1% risk percent, that's very realistic. Good drawdown here. And then let's say total months. Now let's do 3 years. Okay, remember, we're trading for a long run, right? We're not here to try to get rich in a year. Yes, you can actually get rich in a single year, but you have to compound a personal account majority of times. And also you have a decent starting capital, or essentially risk more, and you're risk more averse. That's all. But okay, let's see. Let's go with most possible. And I think there's nothing else down here. I was just gonna check something. There's nothing else down here. Nope. Okay, let's go back up here. So you guys can see it filters by every single year, which is very nice data. You turn 1K to almost $1 million in 3 years, risking 1% per trade, taking 2 trades a day, 50% win rate at 2R with $1,000 initial balance. Let's make this 40. Let's make it 5 years. 5 years. 50 mil. You guys can see how the power of exponential gains is, right, on the account. It's exponential. Look at the account growth in terms of monetary value. It is 100% exponential. This is all exponential growth, right? Hope you guys know what that means from school. But yeah, this is all exponential growth. You guys can see the percentage is maintained, but the monetary value, how much money you're making, profit per month, changes. First year you go from 3 figures. Second year, 4 or 5 figures. Third year, 5 figures. Then 6 figures, 7-figure months, right? That's the power of compounding your account. It truly is incredible. A lot of people just don't do it correctly, or don't even know that this is possible. Okay. And of course, I'm not saying you're going to make 50 mil in 5 years with $1,000 account balance, because what I tell you guys before, that as your account grows bigger to a certain point, because psychologically you don't want to go on tilt, you're going to risk way less than, I guarantee you will risk way less percent as your account grows towards the 7-figure range. You will not be risking 1% per trade. More likely you'll be risking maybe 0.5% per trade, right? Or even 0.2. It all depends on how comfortable your life is, your life situation. Everyone's in a different situation in different part of their life. So there's too many factors, okay, to give you a very realistic number. This is just going off 1% risk per trade. Let's go with my system, my stats, I'd say. So around 50% win rate. If I include break even and such, getting rid of some losses, 60%, but 50% is good. And risk reward, let's just be more conservative. Let's put it at 4 because of spread and commissions. And then risk percent per trade, we can leave it at 1. Let's do 1 year first. And then this is at 2 trades a month. So we'll do that. This is something very interesting, definitely for sure, for you guys to see. For people, this will help you develop like a long-term outlook on trading, essentially. Okay, 1 year, 1,000 turns into about 800K. Taking 2 trades a day, 50% win rate with a 4R average, risking 1% consistently, right? But I'll highly recommend, if you're starting an account, it's better to have a bigger account size and risk less percent than have a smaller account and risk more percent. That's just my personal view, but again, if you don't have the money for it, then of course, yeah, definitely don't force yourself to fund a big account initially. Start small, right? Start small and just maybe risk a bit more. But don't forget your maximum drawdown percent is going to be more as well. So just keep that in the back of your mind. So you guys can see, grows to about almost $1 million in a year. Okay. And then of course, it's going to grow way more as you increase that. But I'm telling you guys, I don't consistently risk 1% per trade as my account grows, right? It's just not realistic. And especially when your account grows huge, I tell you guys this already, you will face liquidity issues. And your risk reward is not going to be 4 anymore. It will maybe drop down to 3. Okay, let's do, there's nothing I wanted to test here. Show you guys a good example. Let's go back to the 1 and 2 because I think 1 and 2 is a lot more relatable for you guys starting. Especially, I would say even your first 2 years of trading, I would still say is beginner. Maybe not beginner, maybe intermediate. All depends on how much time you're putting in, right? If you're slacking off for 2 years, then you can still be a beginner versus someone that grinded like 12 hours a day, which is essentially what I did. I grinded basically 12 hours a day for 3 years, right? Or I don't do 12 hours a day anymore, but the first 1 or 2 years was 12 hours a day. So okay, so let's start 1,000, 1%, 50%, 1 and 2 risk reward. Average number of trades per month. Let's just go with 20. This is 1 trade a day. Okay, but you can see, even if you're only taking 1 trade a day, if you're being consistent, you will still grow your account nicely. 25K from 1K, that's 25 times return, not bad, right? Let's do, I think a lot of people don't want to look this long term. They don't want to look like 10 years in the future. So if you do 10 years, you see how compounding works. Crazy. Even with very mid statistics, 50% win rate 1, 2 is very mid trading statistics, and you're still able to compound your account like this. But of course, no one's going to be looking 10 years into the future. No one wants to do that, right? So that's why I keep the months number pretty realistic for you guys. Try to keep it, you can do 12 to, I'll say anywhere from 1 year to 5 years is a realistic time frame for you to have a good outlook at. So if you want to just do, I like to do just 3 years, right? 24K from 1K. Best 72, lowest 50. Nonetheless, you're still making money. This is with 1 trade a day. 1 single trade a day, right? I think I already did this. Nope, we did not. But yeah, so for example, if once your account gets to, it doesn't show the account balance every month. It only shows percent return. But let's say once you get 7 figures, you're not gonna hit. You're not gonna hit this number anymore because liquidity is obviously gonna be a way too big of an issue for you. You won't even be trading like a normal person anymore. You have to adjust your trading strategy. But yeah, for these numbers like this, just ignore them because you're not going to be risking 1%. I don't know how to change it, so it changes the risk percent every month, but it's not, you're not going to be risking 1% at that account size. But anyway, I hope this video you guys found very helpful. Hope you guys did enjoy this and take something out from this. It's a pretty long video, but I really wanted to just emphasize the importance of consistency in day trading for you guys. Swing trading, it doesn't matter what type of trading you're doing, as long as it's a profitable edge, continue executing and managing your risk, of course, manage your emotions, keeping those in check. As long as you're continuing to show that consistency each and every single day, show up. And of course, you don't have to show up every single day. What I'm trying to say is you show up every day, and if there's bad market conditions, of course, you tend to avoid trading. You don't force trades. But yeah, so that's basically it for today's video. Hope you guys did enjoy. And yeah, let me know what you guys want to see in the future.